The U.S. insurance system is at the center of a national reckoning, following explosive revelations about its exploitative practices. Disturbing reports have exposed how some of the nation's largest insurance companies operate more like profit-driven machines than protectors of the public. Their business models, allegedly, revolve around taking advantage of the most vulnerable citizens, those who turn to insurance in their darkest hours. In recorded conversations, executives unapologetically discuss their strategies to profit regardless of political turmoil or economic collapse, boasting about their ability to extract every possible dollar from struggling Americans. These practices have drawn widespread condemnation, igniting a movement for accountability and systemic change. Across social media, citizens voice their anger and disbelief, asking how a system designed to offer a safety net has transformed into one of the most untrustworthy institutions in modern America. The outcry isn't just about corporate greed. It's a plea to restore the basic human dignity that insurance was supposed to uphold. With countless heartbreaking stories coming to light, it's clear that reform is not a distant ideal, but an urgent necessity. Will the industry change course, or has the pursuit of profit irreversibly corrupted its mission? The insurance industry, long criticized for its shortcomings, now faces a storm of outrage as new evidence reveals staggering levels of greed among its top executives. Instead of viewing their customers as individuals seeking security, these companies allegedly reduce them to mere financial opportunities. In one shocking disclosure, an executive openly bragged about how their business could thrive even if America's democracy were to crumble, an unapologetic admission of profit over patriotism. This chilling mindset, likened to a zombie that can't stop eating, showcases how corporate greed has transformed a vital institution into a predatory machine. The pursuit of endless profit has not only harmed countless Americans, but has also stripped the industry of any semblance of accountability. As these revelations spread, the public is left questioning. How did an industry rooted in the idea of protection become one that preys on its most vulnerable members? At what point does the relentless drive for profit cross the line into outright exploitation? More importantly, how can trust be restored in an industry so deeply detached from the people it claims to serve? The aggressive debt collection practices of the insurance industry have reached an almost dystopian level, leaving countless Americans feeling cornered and dehumanized. Clients, some facing extreme financial hardship, report receiving relentless calls, sometimes several times a day, demanding payment regardless of their circumstances. One former employee chillingly described their role as a professional harasser, tasked with extracting money even from those clearly unable to pay. These policies become particularly egregious in cases involving terminally ill patients who are pursued for debts even as they lie on hospice beds. Such actions expose a system where empathy is not just absent, but actively discouraged. For many, these tactics are nothing short of institutionalized extortion, amplifying the financial and emotional burdens of those already struggling. Stories of harassment have sparked a wave of public fury, with critics likening the system to legalized abuse. As Americans demand answers, a larger question looms. How did the industry's commitment to protecting its clients devolve into such unyielding cruelty? And what does it say about society when profit outweighs basic human decency? The insurance system's lack of humanity is perhaps its most damning flaw, leaving even the gravely ill without reprieve from relentless demands. In one of the most gut-wrenching accounts, a woman in hospice care, bedridden and nearing the end of her life, pleaded with debt collectors to stop contacting her. Despite her desperate appeals, the harassment continued unabated, pushing her sister to intervene in an emotional confrontation. Such stories aren't isolated. Employees within these companies describe a culture that actively punishes compassion. Attempts to ease a client's burden are often met with stern warnings or even disciplinary actions, creating a chilling environment where empathy is seen as weakness. Public outcry has been swift and unforgiving, with many branding the industry soulless and devoid of morality. If those nearing death are hounded so mercilessly, what hope is there for anyone else? The question remains, can such a deeply flawed system ever regain its humanity? Or has its purpose been irrevocably distorted by greed and callousness? Few aspects of the insurance industry are as alarming as its pervasive culture of manipulation and dishonesty, all in the pursuit of profit. Employees have revealed being systematically trained to bend, bypass, or outright ignore established procedures to extract payments at any cost. One harrowing example involved a woman with indisputable evidence that she was not liable for property damage, yet the company disregarded the proof and continued to pursue her for payments. Such tactics expose an industry where deception isn't an anomaly, but an operational standard. Staff are encouraged to exploit legal loopholes and fabricate reasons to deny claims or demand unjust payments, often with explicit instructions from management. Honesty and transparency, cornerstones of trust in any service industry, are treated as liabilities in this predatory environment. The repercussions of such behavior ripple far beyond financial harm, eroding public faith in the system entirely. Can reform truly penetrate an institution where deceit is woven into its very fabric? Or has this model of exploitation become so entrenched that only a complete overhaul can restore fairness and accountability? The inner workings of the insurance industry reveal a grim truth. Unethical practices are deeply rooted in the way employees are incentivized. Workers often receive commissions tied directly to the amount of money they can extract from clients, creating a dangerous conflict of interest. The higher the payment, regardless of whether it's fair, the greater the employee's reward. This toxic framework fosters a culture where greed thrives and compassion is systematically punished. Numerous employees have shared stories of facing reprimands for attempting to show empathy, such as reducing payment demands for clients in financial distress. Instead of encouraging integrity, companies design policies that reward exploitation, turning their workforce into instruments of profit at any human cost. For the public, this revelation is not just disheartening, but enraging. How can an industry that incentivizes the financial ruin of its clients ever be trusted again? Such a model, predicated on personal gain over public service, raises an urgent question. Does it belong in a society striving for fairness and humanity? The human cost of the insurance industry's exploitative practices stretches far beyond its customers, leaving an indelible mark on its employees. Many workers recount the profound emotional burnout and moral distress that come with enforcing policies they know to be unjust, struggling to reconcile their actions with their values. Employees describe crying in their cars during lunch breaks, developing chronic stress-related health issues, or ultimately quitting in despair. One former employee shared how their simple act of compassion, acknowledging a client's financial hardship, was met with a harsh reprimand from management, a stark reminder of the company's ruthless priorities. This toxic environment dehumanizes workers, turning them into cogs in a system that prioritizes profit above all else. As these accounts come to light, the American public is left questioning how a system so inherently destructive can persist. Is it even possible to sustain an industry that drains the humanity of everyone it touches, or is it inevitably bound to implode under its own weight? Among the most sobering truths revealed is the staggering cost of healthcare in the United States, which forces families into unimaginable choices: seek life-saving medical treatment or avoid financial ruin. Countless Americans have shared heartbreaking stories online, including one man who suffered a severe injury yet avoided the hospital, fearing the astronomical bills he couldn't afford. Tragically, he passed away that night, a preventable death that underscores the brutal inequities of the system. Such tragedies are not isolated. They represent a grim pattern in a country where healthcare has become a privilege instead of a right. Social media is awash with accounts of families bankrupted by an ambulance ride or denied essential care due to insurance loopholes. These stories compel a pressing question. How can a society claim to value life when survival comes with a price tag so steep it destroys livelihoods? Isn't it time to abandon the profit-driven model of healthcare in favor of a system that places humanity above revenue? The glaring deficiencies of the U.S. insurance system have reignited a national conversation about universal healthcare, a concept once dismissed but now gaining traction. Americans are increasingly turning to nations like Canada, whose free and accessible healthcare systems stand in stark contrast to the financial hurdles faced by U.S. citizens. Critics often argue that universal healthcare entails higher taxes, but advocates counter that these costs pale in comparison to the crushing medical debts many Americans endure. Stories of denied care, such as one commoner's inability to secure an MRI despite being insured, reveal the system's cruel inefficiencies. Left with the choice to pay exorbitant out-of-pocket costs or forego necessary treatments, millions face untenable decisions. This collective frustration is galvanizing a movement for change. If other developed nations can prioritize healthcare as a fundamental human right, why does the wealthiest country in the world lag behind? Isn't it time for America to redefine its priorities and ensure dignity and security for all its citizens? The issue of corporate responsibility, or the lack thereof, has become a lightning rod in the ongoing debate about the U.S. insurance system. At the heart of the controversy lies the profits at all costs ethos that seems to define the industry's operations. Critics argue that these companies prioritize shareholder returns over human lives, a claim bolstered by stories of executives openly celebrating the financial gains derived from denying claims or refusing coverage for life-saving treatments. Such practices highlight a troubling imbalance in the U.S. healthcare system, where corporate power often supersedes public welfare. The outrage is palpable, with citizens demanding increased oversight, stricter regulations, and meaningful accountability to curb these exploitative behaviors. Yet, one question remains unanswered. Can a system built on profit-driven motives ever pivot to prioritize ethical obligations? Or has the relentless pursuit of financial success irrevocably corrupted the industry's core mission of protecting lives? As frustration mounts, Americans are left wondering how much longer they can endure being reduced to revenue streams rather than respected individuals. The government's role in enabling the exploitative practices of the insurance industry has come under intense scrutiny, with many Americans believing their leaders are complicit in this crisis. Policies and legal precedents often seem designed to benefit corporations at the expense of citizens. A notable example is a Supreme Court ruling affirming that a corporation's primary obligation lies with its shareholders, not the customers it serves. This legal framework has provided a convenient shield for companies to prioritize profit over people, fueling a system where corporate interests routinely outweigh public welfare. The frustration is evident in public discourse, with growing calls for stricter consumer protections and regulatory reforms to curb predatory behaviors. Critics argue that lawmakers, influenced by powerful corporate lobbyists, have turned a blind eye to the suffering caused by these practices. Why should families bear the brunt of financial ruin while executives reap the rewards of a broken system? As Americans demand action, the pivotal question remains: can the government reclaim its role as a defender of the people, or will corporate influence continue to dictate policy? The stories of struggle shared by ordinary Americans paint a harrowing picture of the human cost inflicted by the insurance industry. From denied life-saving treatments to relentless harassment over unpaid medical bills, these accounts highlight the deep inequities of a system designed to prioritize profits over care. One particularly devastating account involved a woman battling stage 4 cancer, whose insurance company repeatedly denied her requests for a PET scan critical to her treatment. As her condition deteriorated, she faced a grueling appeal process, draining her both emotionally and financially. Other narratives reveal families terrorized by debt collectors over ambulance rides or hospital visits deemed unnecessary. These experiences expose the cruel reality of a system that forces people to choose between financial survival and medical care. If insurance is meant to provide peace of mind, why does it often feel like a losing gamble? With countless lives already devastated, how many more stories of heartbreak will it take before substantial reform becomes an undeniable priority? The glaring inadequacies of America's insurance system have drawn international attention, with citizens from countries with universal health care expressing shock and sympathy. From Canada to Europe and Australia, people share stories of how their systems, despite imperfections, prioritize accessibility, affordability, and the well-being of citizens. A Canadian remarked on how an MRI is provided at no cost, while in the US, the price can exceed thousands of dollars, a stark disparity that leaves many Americans grappling with impossible choices. Similarly, Europeans struggle to comprehend how an ambulance ride, a routine necessity in emergencies, could drive families into financial ruin. These comparisons deepen the sense of frustration and alienation among US citizens, who increasingly question why the world's wealthiest nation lags so far behind in providing basic healthcare security. As Americans confront these stark contrasts, the question becomes unavoidable. If other nations can view healthcare as a right, not a privilege, why does the United States fail to follow suit? What barriers stand in the way of this urgently needed transformation? The media's role in shaping public perception of the insurance industry cannot be ignored, yet its silence on the deeper systemic issues often leaves much to be desired. While whistleblower stories occasionally make headlines, mainstream outlets rarely dive into the broader implications of these revelations. Why does the media shy away from exposing the full extent of the industry's malpractices? Critics argue that corporate interests, advertising revenues, and political alliances have rendered the media complicit, focusing instead on superficial coverage rather than meaningful investigations. This lack of scrutiny has allowed exploitative practices to flourish unchecked, leaving citizens unaware of their full scope. Imagine if the same vigor applied to scandals in other sectors were directed at unraveling the complexities of healthcare and insurance exploitation. Could this spark the public outrage necessary to drive reform? Without robust media accountability, the industry continues to operate in the shadows, shielded from the transparency it desperately needs. To understand the current crisis in the U.S. insurance system, it's essential to examine its historical roots. The privatization of healthcare began decades ago, with policies that gradually shifted the focus from patient care to profit maximization. During the Reagan administration, significant deregulation allowed insurance companies to consolidate power and dictate terms unfavorable to consumers. Later, attempts at reform, such as the Affordable Care Act, sought to expand coverage but often fell short in addressing the core issues of affordability and accountability. Over time, lobbying efforts and corporate influence further entrenched a profit-driven model, leaving citizens to bear the brunt of escalating costs and reduced access. This historical context reveals that the crisis didn't arise overnight. It's the result of decades of policy decisions prioritizing financial gain over public welfare. As Americans grapple with the consequences, they are left asking, is it possible to unwind this web of greed and restore a system built to serve the people? Beyond the immediate financial burden, the psychological toll of the U.S. insurance system is a devastating but often overlooked consequence. Living with the constant fear of medical debt creates a pervasive sense of insecurity, affecting millions of Americans' mental health. Families delay seeking medical care, not because they lack urgency, but because they fear the crippling costs associated with treatment. Studies show that financial stress is a leading contributor to anxiety and depression, and the insurance industry's exploitative practices exacerbate this crisis. People recount sleepless nights, panic attacks, and deteriorating mental health, knowing one medical emergency could ruin their lives. This pervasive anxiety isn't just a personal struggle. It's a societal epidemic that undermines productivity, relationships, and overall well-being. How can a nation thrive when its citizens live in fear of their own healthcare system? To address this psychological cost, reform must go beyond financial relief, prioritizing mental health support and restoring trust in a system that has long abandoned its duty of care. The revelations about the U.S. insurance industry have sparked a national conversation about the ethics, priorities, and future of this vital system. What was once considered a safety net for Americans during their most vulnerable moments has now become a symbol of corporate greed and systemic failure. From skyrocketing healthcare costs to predatory debt collection and outright manipulation, the stories shared by people paint a grim picture of an industry that has lost sight of its purpose. The frustration and outrage are palpable as citizens demand answers and action. The question now is, how can this broken system be fixed? Can lawmakers rise above corporate interests to enact meaningful reforms? Can companies be held accountable for their exploitation of both clients and employees? The American people are resilient and resourceful, but they shouldn't have to fight this hard just to live with dignity. It's time for the nation to confront these issues head-on and reclaim the idea that insurance exists to protect, not to profit. If not now, then when will enough finally be enough?